Testing 1 2 3. Testing 1 2 3. Okay, and welcome everyone. And would like to welcome and firstly thank you to all the traders that have actually been informed and registered onto my webinar, because I think it's been a while since I have done this webinar. It's been a good couple of months gap, only because I've been traveling and doing the or conducting the 2 days workshop in various parts of the world, so mainly Asia and Africa. So we are starting the Bretton's webinar 3 times a week now, and this is live basically. And I would like to share my screen as well, so this would then make it easier for everyone to look at my screen and also to share my trade ideas, trade signals as well. And we are looking at a couple of trades as of last week, and it appears to be more leaning towards gold and a couple of currencies that are mostly cross currency. So we'll get straight to it. And these sessions are all live sessions on my trading account, as you can see right here, and we have got this as my live account specifically for the for these webinars. So you're able to not only follow my trades live, but also to look at how I have researched on the right pairs to trade for the day, as well as analyzing the market, analyzing it on trends as well as technical analysis. Based on technical analysis on it as well. So this is basically how the layout of each webinar would actually be on a weekly basis. So we will be having these webinars on Mondays, Wednesdays, and Fridays. Okay, so let's take a look at gold. We have profited from gold's movement as of last week, and last week alone I've only focused on gold, for example, as you can see on the screen, and we have got a couple of losses right there, but it's been covered very nicely. This one here is I think they're all on gold. Yes, correct. Last week I mainly focused on gold's movement, and I've also sort of hinted of a reversal. As you can see, based on the 4-hour chart, we've got a bit of a reversal. So gold at this moment of time, it's probably best to get out of your buy trade and look at areas where it's sinking in and basically sinking in terms of prices, and based on that, it's looking like we may have some trading opportunities on the sell side as well. So yeah, that's basically it. Let me just check. Okay, so with that, I think we are looking at more potential to trade gold, but also with safe havens as well on the buy side, mainly because it's a opposite parity that we can see between the safe havens like CHF, Japanese yen as well, and also USD. Now, these 3 currencies are safe havens. Now, let's just look at gold in particular, and I'll just get rid of that. And I would want to just look at how we could actually be trading gold as of now, and what are the areas of trade, whether it's on the buy side or sell side, where are the zones, and we can then place a pending order on these trades. So I'll always leave my stochastic right here and use it as a divergent tool, and that will then be a very valuable tool in giving you hints of a reversal of the current trend. But before that, let me just give you a little bit of a hint or the evaluation process of a trend that I usually keep it very simple and manual. It's manual. So let me just get rid of all the objects that I have drawn on my screen. Now, this is gold on the 4-hour chart. It's trading at 1915 area. And as you can see, it has made that reversal as of that level right there, the 1930s level. So at 1930s, it has now begun to give you a little bit of a reversal potential. So that means going to the downside. Now, with that, it's mainly due to a, what do you call that? To a second. Let me just move this. Okay, right. So mainly it has given us the potential of a sell side potentially only because, just give me a second, only because it has been shown to have a divergence. Divergence is the opposite of what you can actually see between the candlesticks and also the stochastic. So what that means is that I'll just give you that drawing right there from that high to this high right here. We could see that it's a higher high, but then when you draw that from the stochastics point of view, that's a flat line. So that's a divergence when it does not match. If it were to be a slope going upwards and then it reflects the same in your stochastic, that means there's no divergence. That means there's no reversal. So here it has already hinted a reversal, and hence the market price drop. That's on the 4-hour chart. Okay, so at this moment of time, let's look at the potential of the reversal and how far the reversal would most probably be going down to. Now here, what I do is I usually look into higher time frames and I look at the body of the candles. Now it's very simple. As you can see right here, when we go on to one time frame up, which is the daily chart, very simply, you could see that that's actually a very, I mean, visually a very bullish candle right there. But then as it is potentially reversing at this moment of time, I would like to look at all the potential bearish mother candles to the left, and especially the latest one to the left. Now, here, for example, just to the left of these current candles right here, I could see that we've got a potential bearish mother candle right here. Not really powerful ones, but that basically gives us a hint that if market were to drop, it would most probably be dropping at this level right here, which is the closing price of the that mother candle right there. Now, just to confirm whether that move could be backed up by other bearish mother candles in the upper time frames, what you would then do is look into the weekly chart and see that yes, it could be supported by a bigger mother candle right there on the weekly chart. If you go on to the monthly, you could see that um, candle or bearish candle still is really strong, right? So this is basically where I would then look into some selling potential and go on to lower time frames, even the 4-hour chart, just to look at, okay, yes, there's a fall on there, but then the daily chart gives me an idea of how far it would actually be falling to. And with that fall, basically, it would actually be looking into um, some potential selling right there from 1916 onwards, where the current price is, right down to the 1900s. So I would suggest, even to exit at 1905, just in case if you are actually already selling right now or you're thinking of selling, you could sell at any moment of time and look into the potential of a reversal on the buy side, basically selling now and then exiting on the TP at 1900 or slightly above. So that would actually be the action plan for now as we speak, is to look into a little bit of a sell opportunity right there. Now, let's look into trend-wise overall and what we could actually expect for gold. Now, in knowing the trend overall, we would do a trend analysis, but the trend analysis would be based on the whether it is the hourly or shorter time frames, we could actually do that even starting from the 15 minutes time frame. But what we need to do is firstly to apply, second, let me just get rid of this, apply the three EMA lines as you can see on my screen. So on the screen itself, I've got 50, 100, and 200 EMA. EMA stands for the exponential moving average. So all you need to do is to insert one by one the 50 right here, 100 and 200. So what I would like to look at based on the three moving averages is to make sure or to view the cluster of candles of whether or not they're above all the three lines or whether they are trading in between all the three lines, which basically means there's just no trend, or to me, it appears to be sideways trending market. And if they were to be trading under all the three lines, then it is going to give me the hint of a downward or a bearish market. So with this, not only the cluster of candles movement, it is also the three lines, the way the three lines are actually moving. Now, if they are actually going sideways, now that's clearly a sideways market. Now, if it is going with the candles on the upside, that's a bullish candle, and vice versa. If they were to be moving to the downside, then you're looking at a potential downward type movement. So here, for example, just based on the 15 minutes chart, we are not able to just look at an overall trend based on one time frame. So we need to cluster up all these candles and movements on all three, at least minimum three time frames, to give us a little bit of a bigger picture of how the market is actually moving. Now, from the 15 minutes chart itself, it looks like a sideways trend only because we have got three lines moving sideways. We don't really have the confidence of a cluster of candles moving above all the three lines. They're actually moving right sideways as well on that 50 moving average. So that's just not clear. So what we need to do then is to just go one time frame up progressively and to look at whether or not we've got a collective picture of the market and not based on just one time frame. So let's just move on to the 30 minutes chart. Now, 30 minutes chart, we have got that three lines moving up very slightly, and we have got the candles moving above all the three lines. So because it's moving above all the three lines, we're looking at a pickup of the trend to the upside. So that's basically what we would like to also see in the other following upscale time frame. So here, if we move one time frame up again, which is the 1 hour time frame, you could see that these three lines, we could almost build a story from the 15 minutes chart. We're looking at a progressive increase, not only of the candles being above all the three lines, but the slight movement or slant of the three lines moving upwards. So that is a good sign. So far, we've got three time frames starting from the 15 minutes, 30 minutes, now to the 1 hour, giving us the indication that there is a movement to the upside. Now, there is a trend expected to move to the upside. Then what we would need then is to look at whether or not the higher time frames match that of the lower time frames as well. So if we've got this kind of match on the 4 hour, on the daily, especially on the daily, the monthly, and the weekly, then we are on a good position to actually expect a higher movement of the price of gold, meaning bullishness expected on an overall scale. And only then we can actually pick the time frames to trade on, whether it is a shortest time frame, medium, or even long term. Okay, so at this moment of time, I'm just doing a trend analysis. A trend analysis is really key for you to understand where we are at in terms of trend. And once you've done a trend analysis, then we need to do a trend strength analysis using the average movement index, or the ADX as it's called. So once we've done that, and only then we are able to trade in stages. So I'll take you through the whole process in knowing exactly how to trade gold for now, but then we start off with a trend analysis first, and then a trend strength analysis, and only then we take it one thing at a time, or one technique and one strategy at a time, to really decide on when to enter and exit the market for gold at this moment of time. Okay, so here, for example, we are looking at still a nice movement to the upside. You've got these candles distance from the three lines are further up compared to the other time frames. So this is a good sign for a trend to the upside. Now we move on to the 4-hour chart. Now on the 4-hour chart, we definitely have got the candles moving upwards or above all the three lines, but we are not getting a very clear indication in terms of trend clarity based on the three lines. The three lines are just going sideways, and you've got lines sort of entangled to one another or touching each other as well. Now, with trend analysis, when we have got lines entangled, it's not really a good sign, because it gives me or traders non-clarity of trend. Okay, so we need the lines to always move very smoothly towards the upside, like a 12 o'clock angle, towards a 12 o'clock angle on a clock, and also downwards towards a 6 o'clock angle if you're using the methodology of a clock or a watch. So here we are looking at a little bit of uncertainty in terms of clarity of trend on the 4-hour chart, but let's look at the daily chart. Now, daily chart is the same. We have definitely got that pierce through of price to the upside based on the daily chart. But then we have got this non-clarity of trend, and hence the reason for a potential downside movement as well. But of course, we have confirmed, sort of confirmed the reversal potential with the stochastics. Now, with just the trend analysis itself could give you a hint that the trend is not that clear, not that strong. With the ADX, we could know that we would get a hint of whether or not the trend strength is strong or not. But I like to always look at it visually and look to the left as well. It's like crossing a very busy highway. When you don't have the bridge, you're looking to the right, to the left, because it's really busy and it's really uncertain of whether or not you would get a pause of the traffic, so you can actually go across the road. So this is the same way. You're looking to the right for price action, price, what do you call that? The prices, the current price, and matching it with what you could actually see to the left, which are the opening and closing price of major candles, especially. We call them mother candles. And from the body itself, like this one here, we could see that that opening price itself is a very strong support level, mainly because of the nature of that candle with no wick, and I like using support and resistance levels based on opening and closing price, as opposed to just opening price and the wick of the candle, for example. But the opening and closing price of major or mother candles, major candles or mother candles, we call it, are of significant importance. Now, I'll demonstrate that as well. If we're looking at this here, you could see that this was a very strong mother candle, a bullish mother candle to the upside for gold, and this is based on a daily chart. Now, there's always a reason why, let me just get rid of this one here, why the closing price was actually there, and it most of the time is reflected by either an opening price or a closing price of either one, bullish or bearish mother candle. So let's look at this here. If we were to look at where the price have actually stopped, or that resistance level was just right there at the closing price of that bullish mother candle, and then we look towards the left, and we could see all the turnaround of prices concentrated, concentration of prices were all based on that level right there. But we could always go on to weekly chart as well and get a better idea of how that closing price of that mother candle was also respected by other candles in the past. As you can see right here, turnaround of price was there, very close to the opening price of that bearish mother candle, and then we have got another um, opening price of that bearish mother candle right there. Now we move on to a monthly chart, and on a monthly chart itself, as you can see, that yellow single line, horizontal single line, um, was also, got concentrated on this turnaround of price at this level here, which is a very significant level based on these two candlesticks or mother candles, one on the closing price of that mother candle, and then the closing price, then the opening price of that bearish candle and closing price of that bullish mother candle. So these are all very, very significant hints. So with this mechanics of mother candles, I'm just going to give you a little bit of a hint of what I would be expecting. Now, here, as we have done a trend analysis, we could see that monthly chart looks really nice, giving us more hints to the upside. But whether or not there are movements to the upside available sometimes or most of the times in my personal experience, could actually be hinted by the mother candle, the power of very bullish or very bearish or bullish mother candles. So in this case, if we're expecting an upward type movement, then we are looking for bullish mother candles to the left, very powerful ones when we are looking at it visually, of course. Now, here on the monthly chart itself, I just want to hint that there's definitely some power or potential for the movement of candles to the upside. Now, I'll also apply the use of the average directional movement index, also known as ADX. This is a trend strength indicator. Now, I've also applied the level 25 on there, and we're looking at only this blue line right here. Okay, so that blue line right here, if it is above 25, it does not matter, does not depend on what trend the market is on, whether it's an uptrend or a downtrend. It just indicates the strength of that current trend. So here, for example, I'm expecting it more to the upside, so bullishness, for example. That bullishness is not really strong on the monthly chart, mainly because that blue line is under level 25. So because it's under level 25, then we are looking at potential of it sort of reversing as well, meaning that it's probably more to the downside that we're looking at as opposed to the upside. Now, if we are looking at a potential of price to the upside, let's say driven by fundamentals or something just came on and driven prices to the upside, I would then look at the maximum level of where, just to keep us safe for not getting overly excited with the buy, driven by something that has, come in from the news perspective or something that has been unexpected but has driven the price of gold to go, price of USD to fall, and then driven the price of gold to go up, for example. And in that case, what we need to do is always to look at a higher time frame to look at where the level could actually be for us for a stop of price for you personally, to look at it as your TP point and not to think that it would actually go up more. It may actually go up much more, but then that could actually be the body of it, and then leaving leaving the whole candle with just the wick or just the bones. So here, this is good for us to analyze the market this way when you want to be kept safe in understanding if, for example, there is a buying opportunity, how far could you actually place your TP at? And that would actually be a level of resistance as well, based on the closing price of the bullish mother candle. So here, for example, we've got this mother candle right here, which is really obvious. I mean, visually itself, it looked to be the the bigger one or more powerful ones based on the length and size of the body of the mother candle. So here we've got one here to focus on, and we've got another one right there. So I'll just give you a little bit more information on that one. There is based on the movement on the 30th, on the 1st of March this year, if I'm not mistaken. And then we've got this one here on the 1st of July 2020. So we have got a very significant movement there. So what I would firstly do is just to mark it in red, the resistant line, resistance potential, and that is based on that closing price of that bullish mother candle right there. Then the next resistance would actually be based on that candle right there. So we've got them really close. So this is the area that I would think to actually exit before price reaches. Now, if you're on a buy, then you want to you definitely want to ride on a good buy movement, let's say, that have actually happened. And then with that, you can then look at exiting just before the two lines. So two lines right there is 1964 area. We are at 1922, so quite a significant gap of the market I see that has got some buying potential in it. So now what we need to do is to look into the lower time frame to start planning. If we were to buy, where would we actually buy from? Now, the thing is that in that gap, for example, just before reaching that resistance or exit side of it, we see that under that, these two red lines, we have got reversal area right here, right? And we have got a very significant closing price of that mother candle right here with no wick as well, and that's really strong. And then it's starting to reverse there. So I could see that there are potential um, falling of price in this area right here, here as well. So then what I would do is just to mark a potential support based on the existing reversal area. So let me just show you what I mean. So here, for example, because we're based on that theory of where support could become resistance, resistance could become support, but I've always used, which I see to be accurate or more accurate, is to look at the closing and opening price of the candle. So here, I'll just mark the reversal or the opening price of mother candles right here based on this one here, which also hits around here and then on the dot of that closing price of that mother candle right there. So this could actually be a good support to look at because these are based on very powerful, significant resistance line. So because of that, I would think that probably a good area would actually be to look at buying zones to actually be above the 1930 area. So that could entirely be your choice, whether it's 1935, 1931, 1932, to just look at that and to actually exit before the 1964 area. So this is where I could see a potential gap of buying the market right here. We've got significant fall and we don't have an upward movement as yet entering at this moment of time based on this gap right here, right? So this is my buy zone. The moment prices could actually pierce through there, and I would see a buying opportunity, but then exiting before 1964 or before 1965 area, because it's 1964.88, so 1965 area. Looking at the 1965 area could actually be a potential exit area just before reaching 1965, and your buying level or zone could actually be above the 1930 area. So you've got that area to play with. Now, let's now go on to lower time frames and give us a more hints of how much potential could we actually look into buying in lower time frames. So here, for example, I could see to the left, we have got this area right here, and we've got a bullish mother candle. So I'll use that bullish mother candle as a reference of where I could actually buy and where I could actually exit. So I've got, this is based on the daily chart. So based on the opening price, I would think that a safer area to buy is not only above 1930, but above 1932. So that's because it's based on the opening price of this bullish mother candle right here. So I would then adjust my buy to look at potentially either 1932 or even 1935. So then I've got, okay, I've got my pending order, sort of first entry to be at 1935. So yeah, it is 1935. There you go. And then to look at the exit price as far as 1965. So I would look at 1960, for example. So I've already got an entry potential and also an exit potential for gold. And this is all could easily be done on a pending order. So all you need to do is go on to new order right here, change the type of order. Of course, you want to make sure that you've got the right trade size or lot size, and then you want to insert your stop loss area based on your risk appetite, and then your take profit right here could be anywhere at 1960 below or slightly above, but I would give you a hint that it's probably be better under 1965. So 1960 would be ideal. 1955 is entirely up to yourself. The earlier basically gives you lesser profit potential, but a little bit safer in terms of the reversal potential. Okay, then you insert your take profit and make sure the type of execution is changed to pending order instead. So once you've done that, now here, for example, I would think that because my direction is to the upside and it's begun to reverse, so hence there is a limit to my buy side, right? So the order would actually be a buy limit instead of a buy stop. If at the moment we are looking at price moving upwards as well towards the direction where you have intended uh, to trade on, then it would be a buy stop. So here, most probably, it would be a buy limit. But then whether or not it's a buy limit to take the execution on a buy limit or a buy stop does depend on the market itself. So at that moment of time, it could actually be going up also just at the moment that you're clicking, and it all depends on what's available. If a buy limit is available, it will let the order through. If a buy limit is not available and it just rejects your price, then you can just change it to buy stop instead. So that is basically it. So it's quite simple. If at all you are not able to place a trade, let's say on a buy stop, just change it to a buy limit. It's just because of the reaction of the market at that moment of time is reflected onto the order execution. So that's all. Okay. All right. So we've got a buy limit right there. Let's say. So I would like to put it at the price of 1935. Let's say. So all I need to do is set it there, 1935. There you go. And then my take profit is the 1960 area. So I've got 1960 right there. Okay, and that's your buy limit right there. And based on the daily chart, we have got the ADX being above 25. So that's a very good indication that I may have some strength in the market. So there is a strength in the market for a buy trend or an uptrend. So only then it would actually be better, ideal to execute the pending order as well. So then we are safer, and we don't actually need to be overly stressed in monitoring and making sure whether or not coming back to the screen all the time, and that would only increase your stress level. So pending orders are the best. I've been on pending orders for the past 10 over years, and it has actually been really useful in reducing my stress level as well, and keeping us more focused on analyzing, picking the right pairs for the day, and doing your trend analysis properly. So there you go. I'll just leave the stop loss out, or perhaps I can always look at 1920. As we can see, we've got candles right here. 1915, for example. That's entirely up to yourself in terms of your stop loss level, based on your risk appetite, of course, as well as your strategy. So now, as you can see, it's got a bit of a blockage type sound, not letting your order through. So what that also means is there may be a possible rise of the trend. So we need to, it's going towards the direction that we want, right? So we placed a buy, we wanted to place a buy. So that basically means that the price order would actually be, price direction would actually be moving up as well at the moment. So hence the reason your the my buy limit didn't actually go through. So all I need to do is simply change that to buy stop instead, and that should actually go on. So that's basically it. So which is a good sign as well. A buy limit, a buy stop does indicate that the price is actually moving, as you can see, towards the direction of our direction, which is a buy. So that's a good indication actually. When your limit order is failed, it does not mean it's your fault or anything like that. It's just basically how the market's actually currently moving. So because the current market is moving in that way, moving towards your direction, that could possibly be that the trend analysis was done properly as well. Okay, so here on the 4-hour chart as well, we could see that there is a potential of movement to the upside, um, based on two things. One is the bullish candle to the left. We've got the body of a bullish candle to the left, mother candle. And also we have got the strength of the current trend based on the 4-hour chart to be high, or to be strong, because of this blue line right here. It's above the level 25. So if we go on to the daily chart, it is the same, where the the blue line is actually above the level 25. And we're looking at not really a bullish candle, but a potential for it to actually move to the upside. So I think it's limited as well, for the whole day of today, perhaps because it's on the daily chart. It stops to give me the strength of the uptrend. So the strength of the uptrend sort of limited at the moment, based on the daily chart. What does that mean? So that means that I could not see the strength of the market on the weekly chart and the monthly chart, mainly because of this blue line. When we go on to the weekly chart, it's under level 25. But when we are on the daily chart, it's still above, as well as the 4-hour chart, right? So what that means in terms of time frame is that the upward or bullish market for gold could move anywhere to the upside between 4 hours, anywhere between 4 hours to one day, so the whole of today. So it could actually start weakening anytime today as well. So we have an indication of a reversal downtrend. So our buy has to be limited. So it is actually quite a limited idea or trade idea at the moment to actually buy gold at this stage. It could also be risky, only because when we look at shorter or lower time frames, we've been indicated of the reversal already. As you can see on the screen, it's already reversing, and we can see that bearish candle right there appearing on the 30 minutes chart. On the 1-hour chart, it's got a bullish candle with a long wick, and that long wick usually indicates weakness to the upside, because the body indicates strength, but the longer the wick, the weaker it is to the upside, if it is showing to the upside. right? So that basically means it has that candle has actually experienced a price rise for gold right up to the end of the wick level, which basically means that it has actually gone to the 1925 level, but then it start weakening, and then the body start to fall and go to a lower level right now, trading at 1920s area. So we have got that 5 ounce of gold difference right there, has actually dropped, and as you can see on the 1 hour chart right now, it is weakening. And could we actually have the power of a bearish mother candle supporting that fall? The answer to that is yes, because we do have that bearish candle right there, even on the 1 hour chart. But a bearish mother candle, not a very strong one visually, but it's reasonably right beside the current price at this moment of time or past candle movement. But it's a bearish candle right there. Okay, so with that, we go on to the 4 hour chart. We could not see it until we go a little bit there, and then we could see one bearish candle right there, mother candle, another one right there supporting it. We've got various right here. Now, this one here on the 4 hour does give me a hint that if at all it falls lower, it might be able to ride along this mother candle as well, based on the 4 hour. So it's giving me a lot of hint of a drop in price. Now, with that, I want to also take this away and replace the indicator with the stochastic indicator, which basically is a very interesting and unique indicator that I use differently. I use the stochastics not for overbought, not for oversold, but for reversal instead. So with that, I would like to show you how we use that. If you insert that, if you would like to insert that, just go on to indicators and go on oscillators. It's part of the oscillator type indicator, and click on stochastic. And there's no need of changing any of the parameters. Just leave it as default or as it is, and click on to OK. Now, all I need is to look at divergence. That basically means whether there is an opposite indication from the candles compared to the stochastics itself. And what I mean by that is just to look at the high and low first on the candles. So here, for example, very easy. I have got, this is based on the daily chart. You can do it on based on any time frame. And you can see that I will mark off this area right here, the highs and the lows. Let's say the highs first with yellow, right? This yellow boxes right there. So that's an area of a potential, let's say, a potential high right there. And then you want to compare that, let me just, with the current price area. So the current price area is somewhere here, right? Okay, so if we connect the dots or connect that these two boxes, these yellow boxes, sort of like a trend line from the high to the current price, we just see that or maybe the next high itself is okay. There is a downward type slope, right? So that high right there is indicated by this high here on the stochastic, and also the current price area or the next high in this area right here of the stochastic. So all you need to do is connect the same and then to this area right here. So you could see that on the candlestick, there is a slope downwards or a trend line, a downward or downtrend line, right? But this one here is an upward, slightly slanting to the upside, or a slope to the upside, but they do not actually match between the trend line on your candlesticks chart and trend line on the stochastic tool. So on the stochastic indicator. So here, for example, if it does not match, one is down and one is high, or in any variant that they don't actually match or they mismatch, then we have a divergence. If we do have a divergence, that basically means that there may be a reversal coming very soon, based on the current movement of the candle, the cluster of candlesticks. So what this means is that the current movement is on the upside, right? So we have got an upward trend right here. Yeah, we've got an upward trend. Let me just move that, change the color a little bit. So we've got an upward movement of these candlesticks to the upside. So what is expected because of the mismatch, or we call it a divergence, is that this movement to actually start moving downwards. Okay, so that basically means on the daily chart we expect a reversal. So that is really very risky if you want to go ahead and buy at this moment of time, because anywhere from 4 hour to a day, we're expecting this reversal, this moment of time, right? So hence the reason I've marked a very small chance of a move to the upside. But it is actually very risky. Hence the reason we're putting it on pending order instead. So only if it rises to this area here, to the upside, where we have got a little bit of a opening price of a bullish mother candle, then we can actually see the rise of price a little bit more. So that's at the 1920s level. So now it is still at 1917. If it continues to drop, then we are looking at more potential for it to actually drop further, because we have actually got this area right here where it's shown to be on the bearish territory. So I'll mark the bearish territory in red. There we go. Okay, so then we've got a bit of a bearish territory right there. As you can see, the price is just about to move along, but not just yet. So what I would do as well is I would also mark the bullish territory. These are all short term actually, only because we are seeing the potential reversal as well that can actually happen anytime today, most probably. And this is your bullish level. As you can see, there's a gap there as well, right? So there's a little gap, that black area right there is your gap, like no man's land, where it's not supposed to be a trading area place there. You shouldn't place a trading area in within the, shouldn't place a trade uh, based on that black area right there, the black zone, right? So now the current price is indeed in that black zone, in that little gap, in black, right? So once prices have actually either pierced through the blue, then you can actually look into buying opportunities. And if it actually starts to fall and comes downwards and pierces through the red box, then you're looking at selling opportunity. So a lot of traders would actually ask, do we actually buy? Do we actually sell? Now, at this moment of time, it's a no trading zone, only because it's very unpredictable, because it's not in the blue zone or in the red zone. So the blue zone only starts at, let me just look at that. Okay, blue zone only starts at 1920s and above. So 1925 would be better for you to look at that. 1925 and above, or 1920 and above, but reaching towards 1925 would actually be ideal to just make sure that that uptrend is picking up and no outside or external factors are actually impacting the move, because anything can actually happen at this moment of time when the price is at that zone where it's in the black area, only because we are looking at a more solid or high probability area to actually buy gold. Okay, so today we'll talk only about gold, and then from time to time, I'll be sending shorter videos to give you trend signals as well, to give you signals so you can actually, based on that, to enter more trades, especially on currencies or any other opportunities, even on cryptos or precious metal, or even commodities and various others. We've also got a very wide range on the CMT trading platform, especially on various trading instruments, especially on stocks as well. And on various cryptocurrencies as well as all other type of instruments. So it does actually depend on what is going on in during the day, especially when market opens, from a fundamental perspective, geopolitical, economy, and various others, and that all gets summed up into the fundamental analysis side of things. So it's always going to be a great fuel for volatility when it comes from a fundamental aspects. And then I would use the technical analysis side of it to measure the movement potentials, which basically gives us trading potentials as well, and giving us a clearer mode of entry, as you can actually see for gold, and also where you actually exit when you are able to sort of get hints on where the reversals are. So this is where it is really key to firstly understand the importance of picking the right pairs following whatever that's going on fundamentally as well, news, natural disasters, even war that is taking place right now as we speak, between Israel and Hamas. And there are just so many things that we could actually just read on, but it is going to be a tough cookie to really crack when it comes to which pair do we actually pick. In CFDs trading is all about picking the right pairs, because volatility is the lifeblood of CFDs trading or Forex trading as you know it. But it's more accurate to call it CFDs trading, because you are having more than just Forex or currency pairs. You are given the opportunity to also trade cryptocurrencies, stocks, top 100 stocks, as well as you can see on CM Trading's platform. If we were to move on to the market watch area right here on the screen, you can see that we've got a very wide range of currencies, as you can see, and then we've got the some cryptocurrencies right here as well. And as we move along, you could see stocks, and also indexes, and various others. So with this, you are looking at also commodities, corn, sugar, cotton. It does actually depend as well of what's going on, as I've mentioned, in the world today, and especially during the day before you decide to trade. We would need to look at transference of wealth and asset based on factors like the war, or political upheavals, elections, various other things. So it's really crucial to understand how it impacts safe havens, and the mechanics of safe havens would then allow you to understand how do we actually pick the right pairs to trade. So is it great to pick gold for this whole week, coming week, and all that? And in my personal opinion, yes, mainly because of this war upheaval in Israel at this moment of time is giving out a lot of uncertainty signals to investors, and that is usually a transference of wealth and asset from non-safe haven instruments to safe haven instruments. And especially gold is rated as the number one safe haven type instrument, or asset that investors have actually traditionally been interested in times of uncertainty or adversity. So this is where we could see that it's backed up by all other currencies as well. We've got safe havens going up, especially the CHF, Swiss franc, is categorized as a safe haven together with the Japanese yen, JPY, and also gold and silver. Now, gold and silver has got a very, very unique movement parameter, whereby silver is just right under gold. And basically, as gold goes up faster, then silver follows through, but then they start to cross, and then they keep crossing. But then the movement would actually be, as it stands right now, on an upward parity. So that is actually a good sign to look at gold as a potential investment, whether it's precious metal or trading CFDs, trading gold on the CFDs side of it. And I see it a good potential radar or a sort of an analytical perspective, especially technically as well. So we want to always balance out and combine fundamentals with technicals. But as I see it from over 15 over years of my experience in trading, I see that it's always functioning as the fuel of the market. That's the fundamental side of it. And then we have got the technicals to help us confirm the size of the movement, visually, so we can then look at it like a map. So the technical chart usually acts as a technical as a map or direction of how far could it actually fall to or rise up to. So that's where we could actually measure it. And I usually use technical analysis, especially with strategies and patterns and all that, only at the very last section of my analysis. I usually take it through technical analysis. Has to consist of your trend analysis first. And in that trend analysis, you would need to measure the strength of the trend. So it is almost detrimental or very deadly if you were to just jump onto your chart straight away and just based on technical analysis only. What I have found is the fundamental side of it, of just using some free tools to understand the movements of currencies, especially your FX pairs, during the day or in the early trading sessions, will allow you to understand the movement and the interest of traders to which pair. And that could then be matched up with fundamental factors. And when you do that kind of match, then it would help traders, especially like you and me, retail traders out there, to know that we can actually pick the right pair for the day to actually trade. Now, once we've picked the right pair, what that means is that we're able to match the movements with volatility, current volatility, together with fundamental factors. Now, we've got fundamental factors that consist of natural disasters, even war that is happening right now between Israel and Hamas. We have got still the aftermath effect of the war between Russia and Ukraine. We've got a lot of factors coming in from that scenario of Russians, or the Russians being cut out from supplying everything that they have supplied to Europe, being the main impact at this moment of time as well. So with that aftermath came the decision or the announcement by Germany as of late yesterday, or sorry, as of a couple of days ago or over the weekend, that Germany is going through a recession, and Germany has gone into a very tough economic crisis at this moment of time, and they've admitted to it mainly because they've relied on the gas. 80% of Germany's gas comes from Russia, and that has been a very big sanctioned, has been sanctioned already, cut off, and has been confirmed. So then Germany announced that. Now, for Germany to have announced that, being the superpower in the Eurozone, or the top economic contributor of the Eurozone, that is basically going to impact the euro. So with that comes, it's because of a crisis, and because of a crisis, that could also be contributing to the rise of gold. But the timing is very important. As we can see, there is a potential of a fall of gold, and that fall could actually be a good thing as well for the price rise later on. Why? Because of the simple fact of investors and traders wanting to buy cheap and sell high. So for them to expect, for traders, investors, and speculators to expect the price of gold to go up much more in the medium to the long term, it has to actually start falling first to create that step or that bounce to go up, right? So that only then will it be more attractive and a bigger scale of buying once it has got a sort of moderate to significant fall as well. Because at the moment it's trading at 1920s. Now we have got an expected fall shortest term to the 1900, and the 1900 is a nice step for the bounce or the support to take place as well. And it has historically been a psychological level as well at the 1900. The next fall, if it were to fall even lower, it would actually be zigzagging going down. It wouldn't be like just a straight line. So it would be zigzagging, zigzagging. But the bigger fall could actually be as low as 1875. But when is the question? So hence the reason we don't want to look at all these level and just put it on as a level that you can take profit, you can sell, and you can take profit there. That would be very, very risky. So hence the reason we are planning it by the day and in stages so that you could actually ride the uptrend and the downtrend and not just leave your trade open, especially for gold, because gold requires a significant amount in lot sizing as well, right? And a significant amount in your capital as well. If you want to trade gold and then you want to trade as well currencies and crypto and various others, and you want to get it all in as profits, then it'd be a very, very risky thing to do, especially if you've not picked the right pair following the right scenario of the market, the right trend of the market, and then the right fundamental factors or drivers in the market. So hence the reason I would like to invite you every Mondays, Wednesdays, and Friday to my free webinar. And I'll be conducting 3 webinars at 3 o'clock Cyprus time, which is GMT +3. And with that, you're able to just know what I focus on in my personal trade, as this is my personal trading account, as you can see, and it's a live trading account. And whatever that I am doing researched on and then analyze the market to trade on, I would then share it with all of you. So with that, you're able to monitor the progress and performance of all the trade calls and the analysis and the strategy that I share with you, and you are able to pick it little by little. But then what I would love for all the traders to do during my webinars is just to ask a lot of questions, of course, but also to follow my trade calls and signals and see it for yourself of how effective, how accurate they are. And only then you're able to actually prepare yourself to attend my 2 days workshop in your respective countries. So I'll be conducting my 2 day workshop live on a weekday starting next month onwards in Malaysia, in Philippines, Indonesia, as well as Africa. So with that, I would like to say thank you for attending my webinar for today. I would like to end my session as of today. And the next time around, I would welcome more questions. And the more you ask, the better your trading results would be, because you are able to troubleshoot with me your current trades as well. Okay. So at this moment of time, that is basically my trade signal as of now, is to do your to conduct a pending order for gold buying at 1920 or 1925. It's entirely up to you, but to exit basically at the 1960 area or before 1960, 1955, 1954. It's entirely up to yourself. So I've got that gap there of a buy anywhere between 1935 to 1960, right? So 1935 to 1960. 1935 is your entry area. level, and then 1960 is your exit level. Before 1960 to exit, above 1935 to enter at your buy. As you can see, I've already done a pending order right there. So I'll just show you the pending order again. So here we have got the pending orders done as a buy stop. I have traded, I've put one lot, sorry, onto my trade. That's for gold. Price of buy is 1935. Stop loss is at 1915. My take profit is at 1960. So it's entirely to your discretion when it comes to the stop losses, as well as the entry and the buy. But I've given you that gap of where could it actually be entering at for the buy above 1935, and then you need to exit before 1960. Okay, so that is your trade call for today on gold. I would like to just focus on gold, but as of tomorrow, I'll be releasing some videos as well in my groups, in the groups that you are all in. And with that, you're able to look at all the other currency pairs that I will be placing pending orders on. And I think from tomorrow onwards, we're looking at more movement expected, more volatility as well. And with that, I would like to thank you and see you in my next session. Take care, happy pipping, and we shall see you all very soon. Take care. Bye bye for now.